Now, even though comparing a $10,000 investment into something like VOO, the Vanguard S&P 500 ETF, to something higher yield like JEPQ, the JP Morgan Nasdaq Equity Premium Income ETF, is sort of like comparing apples to oranges because although both of these investments are ETFs, they have very different strategies, objectives, starting yields, growth potential, etc. But still, for many young investors looking to build out a long-term portfolio, the idea or the question of whether or not it's better to invest into something like VOO, the Vanguard S&P 500 ETF that offers a ton of potential growth but a much smaller yield to start off with, or something like JEPQ that offers a ton of income from day one but maybe not as much growth, is very relevant because a lot of newer investors are huge fans of both these ETFs for good reason. So in this video, we're not only going to go over JEPQ and also the VOO ETF, share what both these ETFs are, how they work, and why they're so great. But then later on towards the end of the video, I'm going to go through and share with you guys what an investor will be better off doing with a $10,000 investment potentially. And spoiler alert, the result even shocked me, so you're definitely going to want to stick around. So if you're a long-term investor interested in either VOO, JEPQ, or maybe both of them like I am, make sure to stick around, drop a like down below, and let's get right into it. If you are a dividend investor who wants to level up your portfolio, you need to be tracking your dividend income consistently. And that's why I created the perfect dividend tracker that I've used to scale my dividend income up to all-time highs over the last year. Now, along with this dividend tracker, you're also going to receive my A to Z dividend investing ebook, which shows you how I personally started from $0 several years ago to now where I earn over $7,500 per month in dividends. So if you want this tracker and the ebook, go to the first link down below in my description and grab it today. Now, just to go over some of the basics, although a lot of you guys probably are already familiar with the Vanguard S&P 500 ETF or ticker symbol VOO, which is brought to us by Vanguard, of course. It says right here in the product summary, this ETF invests in stocks in the S&P 500 index, representing 500 of the largest US companies, which is probably why this ETF is so popular and why it's done so well historically. Now, the ETF is also super cheap to own with an expense ratio of just 0.03%. And VOO's performance over the max time frame definitely speaks for itself. The ETF has been returning investors around 15% year after year after year. Now, JEPQ, on the other hand, doesn't necessarily just buy into a basket of stocks. JEPQ, on the other hand, seeks to deliver monthly distributable income and Nasdaq 100 exposure with less volatility. And this is by utilizing a written out of the money Nasdaq 100 index call option strategy, which when done well is able to offer investors like you or I a ton as far as dividends consistently. Now, JEPQ's dividends historically have been massive, around 35 to 50 cents every single month for investors, where VOO, on the other hand, only offers around $1.50 or so every single quarter. And keep in mind, VOO is much more expensive than JEPQ. Now, JEPQ's expense ratio is 0.35%, so it is more expensive to hold on to. But for investors out there that are looking for income from day one, JEPQ is one of the best ETFs across the market to do it. Now, the next big comparison is really going to be looking into VOO's performance as far as price return goes, and of course, looking at JEPQ's performance on the max time frame. Now, JEPQ in the 1 year is up around 18%, which is not bad whatsoever, especially because this is not accounting for all the massive dividends that are also paid monthly. But VOO, on the other hand, is up almost 33% on the 1 year. Now, JEPQ has not been trading as long as VOO has, keep in mind. But since around 2010, VOO is up around 448% on the max time frame, where JEPQ, the max time frame, it's only been trading for a few years, but it's up only 16.69%. Now, again, I understand that comparing both these ETFs is like comparing apples to oranges. These ETFs don't have the same mechanics or strategy whatsoever, but again, just because both these ETFs are extremely relevant as far as ETFs that a lot of younger investors and older investors like, I once again just want to make a video comparing both these ETFs and really backtest both their performances over the max time frame. Now, before we go through and I share with you guys the final performance numbers between VOO and also JEPQ, and like I said earlier, the numbers even sort of shocked me, let's make one thing very clear. For long-term investors that are looking for more growth potential, maybe they're younger investors and have some more time on their side, buying into something like the VOO ETF or the Vanguard S&P 500 ETF, which is an ETF that's probably going to continuously go up and up and up over time. And even if it doesn't offer the largest amount of income from day one, the growth potential is probably going to make up for it and then some. This ETF is probably better off for investors that aren't necessarily super focused on income-oriented investments today or tomorrow, or for investors that want a tax-efficient way to grow their net worth and grow their portfolio all the way up until time of retirement. Now, JEPQ, on the other hand, is probably a better ETF for investors that are a little bit closer to retirement, or even if you're a younger investor like myself. I'm currently 32 years old and I own a ton of JEPQ across my portfolio. But for me specifically, I'm looking to retire at least somewhat soon, maybe in 1, 3, or 5 years or so, and looking to use my dividend income consistently to pay for things like bills, maybe to travel, and or to help out family and friends. So because of that reason, and because my objective is sort of set on finding and buying different income-oriented, income-producing producing ETFs like JEPQ. That's why I decided it made sense for me to buy into JEPQ in my long-term portfolio. Now that being said, if I didn't have any care in the world about income, if I just wanted my portfolio to grow as fast as possible, as large as possible, well then honestly, I personally would probably buy into a lot more of something like VOO, because when it comes to the strategy and the mechanics of this ETF, there's no cover call overlay, which means there's not going to be anything blocking your upside potential, potentially at least. Also, this ETF is super cheap to hold on to. You're getting exposure to the S&P 500 for very cheap, and the S&P 500 track record, the performance has just been outstanding over the past several years. But the reality is that these days, even a lot of younger investors that I talk to all the time, either here on YouTube and or on Twitter, a lot of younger investors are interested in buying into more income producing ETFs like JEPQ, because even if they're not necessarily near retirement, they want to buy into something that's still going to offer them consistent high quality returns, and with consistent dividends of 50 cents, 40 cents, etc. per share per month. It doesn't really take all that many shares to the point to where you could cover an entire bill with just a single position like JEPQ. But the craziest thing is that if you compare both JEPQ and VOO and stack them up next to each other, look at the growth of a $10,000 investment with dividends reinvested along the way. Now again, we only have 2.59 years to go off of for this back test, because JEPQ has only been trading for a short time frame. A lot of these newer ETFs that came out over the last 1, 2, 3, 4, 5 years, some of them haven't really been fully stress tested as of yet, and it's going to be fun and interesting to see how they do long term. But just over the 2.59 year time frame, this still was kind of shocking. A JEPQ investment of $10,000 would have turned into around $14,721 over the 2.59 years. Now this is a total return of 47.21%, or around 16.11% average annual total return. Now VOO on the other hand, sort of the gold standard, this is the ETF that everyone sort of looks up to, and for good reason. This ETF over the same time frame has returned basically almost the same amount, 47.3%, or around 16.14% average annual total return, which is basically neck and neck to where exactly JEPQ is, and only if you don't reinvest the dividends along the way. VOO then beats JEPQ, but still by a small-ish margin. Honestly, I thought VOO over this time frame would have done a lot better than JEPQ, but here we are. Now, if I was a betting man, I still would say that VOO over the next 10, 20, 30 years is probably going to absolutely destroy JEPQ over multiple different time frames. And once again, this is just simply because the mechanics of the ETFs and the strategies utilized, etc. But that being said, JEPQ over the time frame that we looked at did hold up pretty well next to VOO, and honestly impressed me even more than I'd expected. So now that we went over VOO and JEPQ, we back tested them, we talked about what both these ETFs are, how they work, and even how much a $10,000 investment has returned both ETFs over the time frame that JEPQ has been trading. I lastly, most importantly, want to hear from you guys down below. For you personally, for your specific objective and your strategy, if for whatever reason you were only able to buy either VOO ETF or JEPQ ETF for the rest of time, which one would you buy for your long-term portfolio? Drop the ticker symbol in the comments down below. If you enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.